Good afternoon this Tuesday, October 18th. Grain futures imploding today, mainly the wheat market as well, tumbling well over $1 from last week Monday's high when wheat futures led the pack to the upside on the renewed surgence of bombing into Ukraine by Russia. But it was not an escalation of the war. It was just tit for tat for blowing up the Kerch Bridge over Crimea that Putin wanted to penalize Ukraine for. Now it's just normal death and dismemberment and destruction war continuing. Now, what is softening the wheat market is the fact that the safe grain corridor looks to be in place. Thursday's comments initially spiked the Chicago wheat back above $9 a bushel after it had sold off some 80 cents already, that then there was new demands by Russia. But these demands are nothing more than they're asking for what was agreed upon in July to be adhered to now, and the resumption of their fertilizer and grain exports as well. Keep in mind, if Russia gets this, they're going to bury the world, as they have 100 million metric tons of wheat, which about 42 to 45 million metric tons of that could be exportable. That pretty much put a lid on wheat prices. And so that seems to be what's in control of wheat right now, is this safe grain corridor prospect still looks like it's in play, even though we have the hard red winter wheat crop down in Kansas hurting. There is some rain on the way, and of course, planting and production and weather does not matter until we get towards next year in March when dormancy breaks. It's moisture then. We can have blowouts in December and January, and it seems like we can still have a record crop if the rains arrive in March and April. So let's take a look at weather for now in the U.S. and South America and where the charts all look right now, with the trend of least resistance for grains being to the downside. U.S. weather models, this is the forecast out through Tuesday, October 25th. As you can see, we have rains that are going to occur in Missouri and northwestern Illinois, southeast Iowa. Will slow down some harvest, but otherwise a good chunk of the harvesting will maintain wide open spaces here. Indiana will, and Ohio also will have good harvesting. So this really isn't a story. Rains, though, arriving southwest Kansas. Could be the story. Oklahoma in the east, where the wheat is growing, eastern Kansas, Missouri. This will be helpful for the winter wheat. Granted, dry areas are still prevailing. We'd like some more moisture up in the north, but southwest Kansas looks like going to finally get some fair rains. Also, rains arriving into Argentina. This is out through Tuesday, October 25th. Looks like the Buenos Aires, Cordoba, Santa Fe, Coronas, all going to be getting some meaningful rains in the 2-inch category up to in some areas. That'll be welcomed here as planting is now getting started. It's like April 18th down there, and they plant till early December. Up in Brazil, Mato Grosso picking up nice rains. Even here in Mato Grosso do Sul, getting rains continually. Parana and also lower into southern Brazil in the Rio area, pulling up Rio Grande do Sul, also getting lots of rain in the forecast. So this aspect for soybeans is now turning negative, especially with Brazilian beans offered for sale in January when they start harvesting around mid-January, about 70 under U.S. prices, 70 under the U.S. board right now. Here is the December corn chart. As you can see, we faltered. Support came in just near the 44-day moving average that we show here, which has been quite reliable. It got pretty close, bounced into the close, but it did take out the trend line support we used in yesterday's newsletter and said we have to hold this purple line, which is 162-day moving average, 162 period moving average on the 6-hour chart, which could still label it a 4. But I think we have a failed fifth building on our hands because if this corn market does not quickly and immediately get back above the downtrend line and be trading 690 or higher this Friday, this is the high for the fall, and we're going to start trending lower into Thanksgiving. And it's just a matter of pancaking. We're going to bounce, hit resistance, hit the green line support, bounce, drop, hit the purple line support, bounce, and then just keep eroding into Thanksgiving as our exports are becoming almost a nothing burger right now with all the grain being piled up along the Mississippi. Soybeans breaking down today. This appears to be the fourth wave, and we're getting ready to start our fifth wave down. We go intraday. We had said the trend lines were giving way. Getting back under this purple line would be bearish. You can spike it, but it's bearish now that we're getting under it and it's turning negative. This implies resistance is on any bounces for the November contract to 1385 will get sold as we're likely in a fifth wave decline. Going to target the 1350 support we've hit once before, but the measurement should get us down to about 1340, and this is a B, C bounce. There's your A, B, C into 4. Now you have a 1, 2. We're in mini 3 of wave 5, and then we'll get some kind of little 4 bounce, and then another finish, probably something close to 1320 or less. Wheat Chicago blew it up today. Would you believe over $1 from last week's highs into today's low, about $1.12 we dropped before bouncing smartly into the close. But if you look at our intraday chart, we give up about 50% of all the gains from the spot low on August 18th. This is your fall wheat high. Typically, we bottom into September, rally into early November. Well, we bottomed almost mid-August and peaked out just before mid-October. And we seem to be in trouble here on wheat. Bounces, now keep in mind, as this purple line on the intraday chart has moved negative, for those of you that can track this, we give you the software to trade this. For those who are trading clients of our brokerage firm at Heartland Investor Services, you can call 1-800-359-0221 to inquire about it. But the moving average here, 62-period moving average, exponential, and he bounces back up to around 880 to 885. Probably going to get sold again on Chicago wheat. Kansas City wheat also breaking its support here. Usually it holds pretty good. This gets spiked a few times, but we need to see a miracle rally here, which we probably will see some short covering bouncing in here. But again, too, just like the Chicago wheat rallies back to about 965 are going to be met with new selling here is what this market is technically telling us. Live cattle finally waking up. We had predicted this was our wave 4 low, but the market got hung up on moving average resistance over all the economic recession concerns, but you just can't fight the cattle numbers that are tightening up. And the December cattle have to get going because October cattle are going to eat them up. Look at this cash market. October cattle exploding, expecting cash trade 147, 148 this week. If this occurs, this will be the highest. This is the December cattle contract right now on our continuation. But the best cash prices back here, we start breaching this 148 value. This will be the highest cattle pricing since going back to spring of 2015. And why not? We go into this winter, we're going to have some tight numbers, and we are projecting December cattle making it to 155 sometime into delivery. February cattle, we expect 160. Feeder cattle, 2 weeks ago on the weekend hedger, I said look for feeder cattle. If they get spiked, troubled, they'll find lows near 172. They hit it right on this moving average. Over the weekend, we said grains should be rolling over and supporting live cattle, supporting feeder cattle, even if live cattle struggle. Well, we're getting best of both worlds, and feeder cattle are now starting their resurgence, and this should climb, and we anticipate January feeder cattle, why not? We're going to take out the highs above 189. January feeder cattle have already been to 191. Just a matter of time. We do expect January feeder cattle probably with a 200. If not January, March feeder cattle will do it. Hogs, got to talk about this one. After imploding to near our lower target of the low 70s, we had been expecting December hogs to go to. 78% retracement was near $72. The market stopped with a 72-something print and exploded. And we figured, well, she'd bounce back up to what used to be support would now be resistance, which is near the 50% retracement. We sold hogs here on a spec trade, got blown out here, and she's still running. But we think we're going to stall out these hogs on this current rally somewhere in the daily valley up here at the 786 retracement of that high to this low. Comes in about 87.41. Add to this the downtrend off these highs. You can see how in the next day or two, anything in the upper in 87 something, probably a sell and get a reaction. Now, the way these hogs are exploding makes you wonder if there's a problem out there in the industry. Was there some death loss we're not aware of? Some birthing problems? Or is it just China buying a whole bunch of pork right now and they'll soon be done? But I do think this rally will finally give up the ghost for the short term as it gets to near 87 to 87.5 and get some kind of reaction. And then we'll see if it's something major. But the hogs have been quite resilient here as of late. The dollar, we got to talk about it. Been retreating again, but I don't think we're going to be taking out the 111 value too soon. November 2nd is the next Federal Reserve meeting. Interest rate hike will be 0.75% on November 2nd. We'll be watching for the communique as to what they expect in December. That's definitely a half. Many think it's going to be 0.75 point. The dollar is still advancing. I think you're going to see this dollar make it up to 120, challenging the 2001, 2002 price window. And then we'll see. A lot of highs. I can take you back in time. First quarter seems to be peaks a lot of times. This is a monthly chart for the U.S. dollar. So maybe we're stronger yet into the new year, probably at 120. And that's not going to help exports. We have to remind you about this. This does not help us in any way, especially with Mississippi as low as it is. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.